Friends, please settle down. Everybody, good morning. Okay. Please stop talking. Branch accounts, a business expansion activity. We classified the branch based on several factors. Based on dependency factor and location factor. Based on dependency, dependent, independent. Based on location, foreign, domestic. We were initially focusing on dependent branch. To understand in an academic sense, if the branch books are maintained by head office, the branch is classified as dependent branch. Accounting for dependent branch broadly into two: single entry, double entry. Double entry into two: data system, stock and data system. In case of data system, we prepare a single account. The name of the account is branch account. In that, we will post few items. We will account only the transaction between head office and branch. Whatever transaction comes through the awareness of head office, that will be accounted. Nothing else will be accounted. Those transactions made by branch with outsiders. 7-step approach. We have in branch account 7 steps. Opening balance, closing balance. Everybody, opening balance. Goods sent, goods returns, cash sent, cash remittance. Formalities. Opening stock reserve, closing stock reserve. Removal of loading on net goods sent to branch. Okay. Stock and data system. 7 steps into 7 accounts. Branch stock, branch debtors, branch cash, branch expenses, branch adjustment, P&L, goods sent to branch. Unique concept is that we don't use purchase sales, we use the term stock. We book the profit when we are sending the goods. At the end of the year, when the profit is not realized, we remove the profit by transferring to stock reserve. It can also be alternatively carry forward to the next year without creating stock reserve account. We discussed through Bangalore branch, Cochin branch problems, correct? So that way we have that particular concept, and we have already made the accounting entries, and we have made the accounts also. Stock account is always expected to tally. If it is not tallying, then find which side is greater. If credit is greater, then the difference is transferred fully to branch adjustment account. If debit is greater, then to cost, profit. Cost will be transferred to branch expenses, profit will be transferred to branch adjustment. Correct? So that way we discuss the accounting for loss of stock. Correct? Respond. That is, if debit side is greater, there are two possibilities. One is sales less than invoice price, loss of stock. If it is sales less than invoice price, then entire balance transferred to branch adjustment. If it is loss of stock, only it is split into cost price and profit. Everybody, so we did adequate number of problems. Bangalore branch was gifted. I hope you would have completed profit. So anyway, I'm just confirming, I'm just mentioning the profit only. You please work out and see. Bangalore branch profit is 13,500, 13,500, and Goa branch profit is 32,500. So question number 6 in the 7. Page number 115, roll number 115. Is there anybody? Name? Naveen will read this for us. Question number 7, page number 115.
Books are sent to branch at 25% profit or cost. Prepare necessary accounts in head office. Opening stock at branch at cost to branch 10,000. Goods sent to branch at invoice price 40,000. Loss in transit at invoice price 5,000. Pilferage at invoice price 2,000. Normal asset invoice price 1,000. Closing stock at cost to branch 12,000. Sales 60,000. Expenses 8,000. Rupees 3,000 was recovered from insurance company against loss
So let us directly try this question. You will try this problem. Prepare necessary accounts means which method? So we will solve under all the methods. Because we need to, it's a unique type where we need to know accounting for loss of stock, normal loss and abnormal loss. So thereby we will be making this accounts under all the methods, data system, stock and data system, as well as single entry model. What is the entry for abnormal loss under stock and data system? Branch expenses, branch adjustment to. What is the entry for amount received from insurance company? Branch cash to branch expenses. Branch cash to. It is not a gain, but it is a recovery of cost. It is a recovery of loss. Correct, Appa? You are booking the loss in what account? Branch expense account. So when you are receiving money, it is a recovery of such loss. So thereby entry will be branch cash to. Please try the question, friends, quickly. If anything is given at cost, you will convert into invoice price. That concept you should always be knowing. Now please quickly prepare the various accounts. Now we have not provided with the sales, whether it is cash sales or credit sales. Correct? Please respond. No information given about debtors and creditors. Upon we presume this as. So there is no need for debtors account. So you need to prepare only 6 accounts. We have no compensation account, only 6 accounts you can prepare. Correct? And then try the under data system as well as single entry model. Very quickly. Profit 25. Does friends understand? Loss in transit at invoice price, pilferage at invoice price, both these are abnormal loss. Normal loss, whatever given, alone to be fixed as normal loss. Profit. That's it. Friends, please stop talking. Opening stock at branch at cost to branch. Opening stock at branch at cost to branch. To balance brought down 10,000. Any doubts? So that itself is invoice price, and you should know, because it is cost to the branch. Cost to the branch is the invoice price. I just try to misguide you by saying one statement. If it is given at cost, please convert into invoice price. Please bear that point in your mind is what I told. I didn't say I ask you to apply that mind. Now listen. It is given opening stock at the branch at cost to the branch. Suppose the statement stopped like this. Opening stock at branch at cost. Then I should have converted that into 12,500. Understood? But here when it is given at cost to the branch, you should know it is already a dash price. Invoice price. So there is no need for once again converting into invoice price. Understood? I don't know how many of you and all prayed to that particular trap. I just told you that if it is given at cost, you should convert into invoice price. Here nothing is given at cost. Everything is already informed at invoice price only. Everybody, right? Immediately, profit is booked by stock reserve. Opening 10,000 into 1 by 5, 2,000. Next. Goods sent to the branch. Branch stock debit. 2 goods sent to the branch. 2 branch adjustment. It is 40,000. 30. Everybody, branch stock account debit. 2 goods sent to the branch, 2 branch adjustment account, 32,000, 8,000, it is totally 40,000. Understood? Everybody? Okay. Next. Loss in transit. Before that, posting to all other places. By branch stock, 32,000. By branch stock. Understood? Next one, loss. Loss 2 types, abnormal loss and first abnormal loss entry. By branch expenses, by branch adjustment. Together it is 7,000. Adala 1/5 of 7,000. 1,400, 5,600. Right? By branch adjustment, normal loss 1,000. Understood? Now let us take that branch expenses to branch stock 5,000. To branch stock for abnormal loss 1,400. To branch stock for normal loss 1,000. Then after loss of stock, closing stock, by balance carry down Then immediately profit should be removed. To stock reserve closing 2400. Then sales by branch cash. To branch stock. Next, by branch expenses. To branch cash. Next, insurance received. By branch cash. Recovery, insurance. Recovery of loss. To branch expenses, insurance. 3000. Correct? Next. So here nothing is closing cash. It is fully remitted to head office. 55,000 is remittance to head office. This account should tally. If it is not tally, find which side is greater. So to branch adjustment 30,000 surplus. By branch stock surplus 30,000. Expenses transfer to P&L 10,000. Actually abnormal loss of 2,600 and expense of 8,000. Correct? Because out of 5,600 loss, 3,000 was recovered from insurance company. So to branch P&L. By branch adjustment account. 2. Head office P&L. That is the profit. And this is transfer to purchases. Please confirm your solution, friends. Can I turn this page? Shall I? Kachaka. Okay. Data system branch account, to balance brought down. We have only branch stock 10,000. 2 goods sent to branch 40,000. 2 cash sent, not there. Then we have returns. No returns. Okay, so thereby cash remittance, which we are finding through the cash account 50. We are not accounting for any loss of stock, expenses, whatsoever transaction happens. For us only goods sent, goods returns, cash sent, cash remittance. Closing balance we have only branch stock 12,000. So it is implied because there is no opening debtors, no closing debtors, no opening cash, no closing cash. So by the reading of the problem, it is implied that it is got remitted, right? So otherwise, opening cash is not there, business is there, stock is there. So which means previous year business was there. So opening debtors not there, opening cash not there. So naturally we understand that it is remitted. Yes, 100%. If you are to try this solution only in a data system, you have to prepare the account and confirm it. So we have buy stock reserve opening 2,000. 2 stock reserve closing. Buy goods sent to branch loading. It is 2 head office P&L. So whatever you have done in 6 accounts, my dear friends, in no time, in 6 steps only we are getting the answer. Now we have trading account, 2 opening stock, 8,000, 2 purchases, goods sent to branch, 32,000, buy sales, 60,000, buy abnormal loss, 5,600. We don't book normal loss entry. Buy closing stock, 9,600. Buy gross profit, 35,200. To abnormal loss, 2,600. 5,600 minus insurance of 3,000. To expenses, to net profit, 24,600. All the methods we are completing. in your financial statements. You buy 1000 units whose cost price will be debited in the financial statement. You sell 700 and there will be some closing stock, imagine 200. Everybody, 100 units are lost. Correct? Now when I don't account or when I don't make entry for this 100 units loss, no, please listen. The loss gets automatically accounted. When I don't make entry, the loss gets automatically accounted because we have debited the cost of how many units, friends? And credit is showing relevant credit only for 900. Correct? So which means these 900 units only is accounting or in containing that particular loss. Correct? So that is what in the normal accounting language, including costing, we say that the loss is borne by the surviving units, good units, surviving units. Understood? That is the basic meaning, that since that cost is already debited, since the cost is already with the credit is there only for 900 units, respond, the loss is automatically accounted, which gets borne by these units. Could you appreciate that? In other words, this is directly linked to our trading activity. Understood? It is not loss borne by surveying units. You learn only theory. You don't visualize what is happening. Loss borne by good units. Loss borne by good units. So in the good units, the loss should be added. I don't know what's happening there. Understood? Don't bring the theory there. Put your practical mind, thinking cap on, and see that how it is getting accounted. Understood? Not theory what is important. You should see that how it is accounted. Na? I have bought 1000 units for 10,000 rupees, which is there in my cost. If I sold means I am showing in the sales. Not sold also I am showing as if it is still recoverable. Correct? But if I don't make entry for the loss, then the loss is accounted or not accounted. In which account? Trading account. But if it is abnormal loss, we don't want that loss to be there in trading. Understood? We don't want the loss to be borne by these 900 units. Correct? That has to be booked as a general loss, not as a product loss. Abnormal loss to be booked as a period loss and not as a product loss. Do you appreciate that? Thereby we eliminate from trading and transfer to P&L. Correct? Normal loss, we want that to be booked in the trading. In other words, that is product loss. Could you appreciate that? Respond, ba. Apo, when you arrive at gross profit, this gross profit should be after normal loss or after abnormal loss? Or after both? The gross profit after normal loss or after abnormal loss? After normal loss. But before abnormal loss. Correct? So thereby only we make entry for what? Abnormal loss. Entry poduvom. By making this entry and credit total of these items minus debit, you get gross profit. This gross profit is after abnormal loss or before abnormal loss? This profit is after abnormal loss or before abnormal loss? Before abnormal loss. Please understand. By crediting abnormal loss in trading, you are not booking the loss. You are eliminating the loss. If you don't make entry, loss is booked. If you don't make entry, you are getting some profit. No. And the concept you should be knowing that profit is after both the loss. Please respond. If you take only sales, closing stock, opening stock, purchase, and you are getting some profit, no. This profit is after both the loss, normal loss and entry podalana. If you don't make entry, then loss is accounted. Correct? In the profit is after both the loss. By making this entry, you are actually eliminating the loss. By making this entry, you are. And then you book the loss in the P&L. Correct? You bring this gross profit by gross profit and you deduct, you get net profit. Correct? Please respond. Gross profit you want after abnormal loss or before abnormal loss? Before abnormal loss. Gross profit we want before normal loss or after normal loss? After normal loss. This is basic concept. Correct? Please respond. Please respond.
Yes, sir.
Adanale we told that normal loss we don't make. The loss gets in the. So thereby gross profit itself is reduced. Correct? Abnormal loss we want that to be separately reduced after finding gross profit. Correct?
Yes, sir.
Seri. Now, this is the basic concept. Everybody, when we discuss this normal loss, abnormal loss, final accounts we already know. Correct?
Yes, sir.
Respond.
Yes, sir.
அந்த பையன் தூங்கிட்டு இருக்கான். பிச்சு விடுவேன். கிளாஸ் கவனிப்பா. உட்காந்து பென்சிலை வச்சு கோடு போட்டுக்கிட்டு. அதுவும் பென்சில் இல்லை பேனான்னு தரல. சும்மா பேவான்னு விளையாடிட்டு இருக்கீங்க. பென்சிலை. கிளாஸ் கவனிப்பா. நான் திருப்பி சொல்லிட்டேன். கிளாஸ் நடக்கும்போது உங்கள் பாடியில் இங்கே வேற மாதிரி இருந்ததுன்னா கடுப்பாயிடுவேன். ஓகே. In data system, explanation. In data system, we don't have difference between gross profit and we don't have difference between. Above we don't make entry for any loss. We don't make entry for the loss gets automatically accounted. The loss gets automatically in case of on a single entry model. We make entry for not entry for. In stock and data system, you should learn afresh. You should know what is stock and data system concept first. Stock account does not show any profit or which account will show profit or loss? Branch adjustment account is the account which shows profit or loss. Correct? Please respond. Stock account will show the various quantum of stock, inflows and outflows, including opening stock, and if the stock is coming in, debit the stock. If the stock is going out, credit the stock. Are you following this? Everybody. Now that inflows and outflows only reflected in stock account. Stock account will not reveal profit or loss. Is that clear to you? So in that case, you should not tell that loss is borne by surviving unit. So stock will be adjusted. It is the profit which has to be adjusted. Could you appreciate that? The profit or loss made by the surviving unit shall be adjusted. It is not the stock which should be adjusted. Could you appreciate that? So branch stock was debited when the stock came in. And whenever it is going out, we will remove the stock. At what price? Invoice price. Could you appreciate that? This point only you should be knowing. So in that case, what we feel is, in case of stock and data system, normal loss or abnormal loss, so both should be reduced from stock. Both should be reduced from stock. Correct? Then loss will be booked where? That is the question. Correct?
Yes, sir.
So normal loss we want to book against gross profit or in net profit. We want the normal loss to be adjusted and then you will arrive at GP or GP minus normal loss. Is it after normal loss you want GP or before normal loss you want GP? Thereby only the entire normal loss amount was transferred to branch adjustment account. Purunjada? Entry is branch adjustment to branch stock. Why credit stock? Because the stock is reducing. It is like a quantity account. Are you following? Inflows and outflows. The real profit or loss gets accounted in branch adjustment. Are you following this? Now abnormal loss, it is not like that. We want the gross profit before abnormal loss or after abnormal loss? We want the gross profit before abnormal loss or after abnormal loss? Before abnormal loss. Correct? Abnormal loss will not come in adjustment, will come only in P and L. That is through expense it will come in P and L. Correct? That is how we made the accounting entry for normal loss. Entry is branch adjustment to branch stock. For abnormal loss, branch expenses, branch adjustment to branch stock. Correct? Everybody? Next question. Yeah, last question under data system. I'm sorry, under dependent branches. Under dependent branches, last question, question number 8, page number 115, 116. 116. இந்த மைக் கொடுங்களேன் லாஸ்ட்ல. Question number 8, page number 115, 116. Name. Geetanjali.
Question number 8. Paper Products has a head office in Chennai and a branch in Delhi. Following information has been extracted from the head office books of accounts as at 31st March 2014. Information relating to branch, rupees in thousands. Branch bank, positive balance, opening 3, closing 12. Branch debtors, opening 66, closing 81. Branch stock, transfer price 75 and closing 90. Transactions during the year, rupees in thousands. Bad debts 15. Branch general expense paid from branch bank account 42. Cash received from credit customers and bank 390. Cash sales bank 120. Cash transfer from branch to head office 459. Credit sales 437. Discounts allowed to credit customers 9. Food returned by credit customers 8. Goods returned by branch at transfer price 30. Goods sent to branch at transfer price 600. Information relating to head office. Opening stock rupees 1.8 lakhs and closing stock rupees 2.2 lakhs. And transactions during the year rupees in thousands. Bad debts written off 24. Cash sales 1500. Credit sales 2000. Discounts allowed to credit customers 29. General expenses 410. Goods written by credit customer 40. Purchases 2780. Additional information. Most of the accounting records relating to the branch are kept by the head office in its own books of account. All purchases are made by the head office and goods are invoiced to the branch at selling price. That is at cost price plus 50%. Required. Write up the following ledger accounts for the year to 31st March 2014. Being careful to bring down any balances as at the date. First, branch stock account. Second, goods sent to branch account. Third, branch stock adjustment account. Fourth, branch debtors account. And fifth, branch bank account. Compare paper products trading and P&L account for the year to 31st March 2014.
இதான் பிராக்டிஸா பாவி. Ronak here. Wow. See, Rahul is good boy. How big yawning you are making? Okay, listen please. Friends, please keep quiet. Paper products having head office at Chennai and branch in Delhi. They have given information balances relating to branch bank account, data, stock account and various transactions given, friends. Information related to head office is also provided. The question is actually becomes very simple here. Through this question, what is the uniqueness we learn? Every question has got some uniqueness. In question number 1, head office directly paying the expenses of the branch. Question number 2, in transit item. Question number 3, Bangalore branch, Cochin branch, interbranch transfer, branch adjustment account having balances, fixed asset balance. Question number 4, missing information GPR, Coimbatore, Trivandrum, Bangalore. Question number 5, the provision and loss of stock computation, Bengal Trading Company. Question number 6, Goa branch, only uniqueness is the dishonored checks. Question number 7, the treatment of normal loss and abnormal loss. Now, through this question, what we are going to learn is nothing new. Only thing is, after finding the branch profit, we transfer into to head office P&L, na? So how that it will appear in head office P&L, what is the impact in the head office financial statements is what we are going to see. So compiling the paper products trading P&L for the year means you prepare head office trading P&L for which they have given information about opening stock, closing stock and various other particulars. Respond pa. Now 2 places it gets affected. 1, the purchase of head office to be reduced. Purchase of, then the profit of branch should be transferred in profit and loss of head office, and you will arrive at the overall profit of the business as a whole. Would you appreciate that? Anyway, that part I will try. What you do is that prepare the branch accounts based on stock and data system, all ready-made information. In that, no uniqueness here. So quickly try. 7 accounts: branch stock, branch data, branch bank. Instead of cash, we use the term branch bank account. Then branch expenses, branch adjustment, branch P&L, goods sent to branch. Please quickly try. Markup on cost 50 percentage, that is 1 by 2. Markup on transfer price. Markup on transfer price equal to 1 by 3. Everybody? Next. Stock and data system. We have branch stock account. Branch debtors account. Branch bank account. Branch expenses account. Friends, please stop talking. Rupees are in thousands. Now two balance brought down. Bank balance. Two balance brought down. How much? 3. Buy balance carried down. 12. Next. Branch debtors. Two balance brought down. Buy balance carried down. Yeah. Two balance brought down. 70. Friends, please stop talking. Then we book the profit. Profit in the profit account by stock reserve. 75 into 1 by 3. 2 stock reserve. 90 into 30. Next. Transactions. Bad debts by branch expenses. 15. Two branch debtors. 15. Branch expenses paid. By branch expenses. 42. To branch bank. 42. Cash received from credit customers and banks. Cash received from customers. By branch bank. 39. To branch debtors. 3. Cash sales banked. It is by branch bank. 120. To branch stock. 120. Then cash transferred from branch to head office by head office bank. 459. Then credit sales by branch debtors. 430. To branch stock. 437. Next. Discount allowed to credit customers. So by branch expenses 9,000. To branch debtors. Right. Goods returned by credit customers. By branch stock. To branch. Then by goods sent to branch. By branch adjustment together. Thereby it is 10 and 20. To branch stock. 20. To branch stock. 10. Everybody. Then goods sent to the branch. To goods sent to the branch. To branch adjustment account together. 200, 400. By branch stock. By branch stock. All items posted. Out of these three accounts, first try to balance debtors and bank. Oh, bank account tallied. Super. Debtors soon tallied. No missing information. Stock account, always credit is higher. This also credit is higher. Oh no. This time we are seeing that there is debit is greater. If debit is greater, I told you the difference is either loss of stock or sales less than. First priority is. So by branch expenses, by branch adjustment, 6,000. The first time we are seeing such difference. 4 and 2. So 2 branch stock and 2 branch stock. Correct? So that account got tallied. By branch P&L 70. Yeah. To branch expenses, and here it is 2 branch P&L. 2 purchases. That's all. So answer is 1, 1, 3. Okay. So please give big claps to Kirti. Kirti Vasana. This page, anybody requiring? Anyway, friends, please listen. Let me also complete the head office, trading and P&L. To opening stock. It is not single entry model of same question, pa. It is different unit of the business, head office related transaction, opening stock. 180 rupees are there in thousands. Then bad debts, 2 bad debts. How much? 24. Sales, cash, 1500. Then credit sales. Normal final accounts, thereby no discussion is made. Directly we are posting credit sales 2000. Next. No, let me take one by discount. 2 discount. 29. 2 general expenses. Next. Goods returned by customers. Sales returns. How much? 40. 2 purchases. How much? 27 minus goods sent to branch. 380. 2400. 3460. Closing stock 220. Right? So 2 gross profit carry down. By gross profit brought down 1100. By branch P&L 113. To net profit of the business as a whole 750. This is the profit of the business as a whole by doing business through head office and branch together, making a net profit of 750. Everybody? Okay.